The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials down 95. Nasdaq is up 70. S&Ps are off 3. Gold contract up $2, trading $18.22. We got silver up 25 cents, $19.42 an ounce. Light sweet crude down 39 cents, $40.51 a barrel. Notes and bonds. This is pretty amazing, folks. So you get the 10-year up one tick, 139.07. The 30-year, however, is up 11 ticks at 179.09. We've been going sideways for 4 months. This baby looks like it's going to break topside, which is pretty amazing in the context of markets at all-time highs. But guess what? Interest rates are going down again. King dollar's down 8 ticks, trading 96.420. Euro's at 113. The yen is at 107.15, and the British pound is at 126 to 1 U.S. dollar. Tom O'Brien, what's going on?
That NASDAQ. I'm going to record myself. NASDAQ's going on, man, every day.
Listen, man, there's no doubt. The NASDAQ is on fire. Those, we get, whether it's 5 stocks or 6 stocks, it doesn't matter. The bottom line is that they're carrying the NASDAQ. They're carrying the S&P, too.
I was just going to say, man, the NQs are up like 10% from June 29th, man. You're talking about 8 trading days. You just went from 97.28 to 10,740.
Unreal. Let's get over to our man, Mr. Kevin Hinks at TD Ameritrade Think or Swim, as we do every Tuesday, Wednesday, and Thursday. And don't forget, folks, if you want to understand the option market, option strategies, futures, outstanding program, 11 to 12 Eastern Standard Time, defined risk. This is a great option market, folks, okay? I've been in these markets for years, and the bottom line, folks, is that you want to listen to this program because when you're talking about defined risk and put up a few dollars in order to catch moves, and I don't care whether you're a bull or a bear, you can get it on both sides because the bottom line is that it's still choppy enough out there. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. You know, Tommy, that was a funny statement you just made. Reporting on the NASDAQ is like being a weatherman in Los Angeles, right? Sunny, warm.
Seriously.
Yeah.
See you tomorrow. NASDAQ up higher. Yeah. See you tomorrow.
Yeah.
Big, beautiful day every day, Kevin, in the NASDAQ. Exactly.
And, you know, hey, the other 3 indices can go up, they can go down, they could be unchanged, and the NASDAQ powers ahead. It's bulletproof. Although we all know that that's not the case.
Right.
Because they're not bulletproof. And I say a lot, you hear me say this on the air, whenever I make some type of statement like that, I always say, subject to change without notice, because that's what these markets can do. They can turn on a dime. And what was in favor will suddenly not be in favor. And what gets overbought and overbought and overbought suddenly is out of favor for a short time as it corrects. So things get overbought, things get oversold. You know, you're starting to see some pretty serious divergence between where the NASDAQ is and where the other 3 indices are. And so as an investor, as a trader, you at least have to pay attention to that.
Yes.
And mark those.
There's no doubt. And, you know, we know it's a brave new world out here. There's no 2 ways about that. What's going to get intriguing, no doubt, is that, you know, yesterday, Kevin, right before I came on the air at 3, there was a monster trade on Tesla. You can see it was a group trade, folks. It was over 24,000 shares sold at just a block, right? And I said, oh, this is going to get interesting because most times when you see large trades like that, these large operators, they don't get out in one trade. Do you know what I mean? So it's like, okay, I can't wait to see how this baby trades out here today because of that. Do you know what I'm saying? Is that okay?
Right.
Is this a monster that, you know, has, you know, whether it's 200,000 or 300,000 shares? We'll find out real quickly. But, you know, guess what? We know that for each seller, most of the time there's a buyer too. But that was a big trade, and it jammed it pretty quick. But I was really surprised it only jammed it. It only jammed it down like about $20, and then the thing came right back. Well, it jammed down $40. It came back 20 in about a heartbeat. So it's like, okay, man, they're still buying it. That's the bottom line.
Exactly. I mean, and Tesla is one of those. It'll have its day. We all know that, right? There's going to be a day. There'll be some news out. Tesla, just like these other names, are getting, these markets and these stocks. They do revert back to means. This is a mean reversion type of trade that we see in implied volatility. Obviously, option traders use mean reversion on a daily, weekly, and monthly basis. We do. And that's why we love trading implied volatility, because it is something you can trust. If you're short Tesla stock, it might come back down, but it also might not.
Right.
There are some people that hated this stock since it was a couple $100.
Oh, there's no doubt.
But implied volatility, that will come back.
There's no doubt. And hey, let's talk Walgreens, okay?
Yeah.
So, yesterday, of course, you had Walgreens. They're going to put all the doctors in there, the whole ball of wax. Today, they're laying people off. And this would be a perfect situation. Let's talk defined risk, because you guys were putting on verticals yesterday, and I thought it was so cool, man. And I knew from you educating us so dramatically the last 3 or 4 years that you were going to go out further, and it's pretty cool that you went out to October, man. I mean, this is so cool. Can you just set that up, Kevin, so you can explain what it? Because it's really cool when you can give yourself that much room, man.
What we do when we want to take our normal practice is when we look at a position that we want to take long term, and I think Walgreens Boots Alliance is probably going to be a longer term trade as it really remakes itself from just a local convenience store into a local doctor's office.
Right.
And that's linked to pharmacies and one-stop shopping. But that's going to take a while.
Yeah.
And it's going to mean, laying off some employees and hiring others and things like that. So what we did, we went out to October and bought a bullish vertical spread. Right?
Yep.
And for a long term, for a minimal amount of money, I think it was just over $2.
It was.
Right.
It was cheap money, exactly.
Right. And so if we get paid over a long period of time, if the stock does move back, and it doesn't have to go back up to its all-time highs.
Right.
I believe we put on like the 40-50.
Yes.
We put on a very reasonable trade where if it just, recovers a little bit, will be profitable. Now, it's not going to be profitable today, but we've got loads. We've got 99 days.
I know.
This to do. And the other thing that we like to do, when we pay a debit for that spread, remember, this is all based on a bullish thesis in Walgreens Boots Alliance long term. What you can do by that, the debit that you pay, you finance it by selling short put verticals.
Exactly.
In the short term.
Right.
And so the decay on that long spread, that's all the way out till October, is considerably less than the higher levels of decay that you get in the short term. So while you have this position on, you're collecting theta net between the two positions.
And it's so cool, Kevin. Now, picture, folks, they're only getting rid of 4,000 jobs. Remember we were talking yesterday? A quarter of their stores, are going to be doctor's offices. Well, if you took a quarter of their employees, that'd be 40,000 employees, not 4.
Right.
Wild, man.
Teardrops and tidal waves.
Yeah. Kevin, have
like
a great weekend, safe weekend. We look forward to speaking to next Tuesday.
Thanks for having me on, guys.
Thank you.
Thanks,
Stay
Kevin.
right there. Tommy and I come right back, folks.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's off 190. Nasdaq is up 24. S&Ps are up 14.5. And bottom line, so the Supreme Court is saying that the New York grand jury subpoena for Trump's tax returns have to be turned over.
Yeah, I don't know if the market's reacting to that.
Well, I think it is. I mean, as soon as it came across,
I think it could be as well. And this may be yet another, not a nail in the coffin. There's 4 months to go until the election, man. We know how every week can change the course of what people are talking about. But if that starts to come out, not what Trump wanted to hear this morning, for sure.
Right. And what happens, it doesn't mean that we'll see those tax returns, by the way, either of folks. But what does happen, this goes back to the Stormy Daniels, $130,000, if in fact he wrote it off as a business expense. So it's a serious matter for anyone when you start dealing with this, okay? So we'll see the second rule, and there's going to be a second and third ruling coming out in the next few minutes as to whether Congress can get the tax returns. But the Manhattan District Attorney will get them. So
yeah, and it's specifically hush money payments that Trump allegedly paid to facilitate two women in terms of how that money, where that money came from, et cetera. Yeah.
Right. So market-wise here, this is going to get interesting. Let's go take a look at that S&P. Well, actually, let's look at the S&P first, okay? So the S&P has had that tough time right at that gap. So a gap down was the baby. And we'll see, what happened yesterday, folks, is that the market itself rejected lower price and did have lighter volume. If you take a look at this S&P, that's what we actually did. We got under the low of the prior day, and it said, hey man, you know what, I don't want to be down here. So we'll see how this shakes out. We got let's see what we got yesterday. So you got 54 million shares yesterday, so you're gonna have to blow that number away first, then blow away 312, and right now you're at 312.70, and right now we're at 314.72. Okay, so natural gas, Tom, let's go take a look at natural gas.
Yeah, let's see what we have going for that market.
I think I'm getting bullish on natural gas,
Okay.
Yeah. So let's see.
You and Warren Buffett, man.
Yeah, I think so. Whisper number 57, survey number 57.
Okay.
So let's see. NG, natural gas. Where's that? Okay, so we're dealing with the August contract. You're at 187. Yeah, this is going to get intriguing, man. It's not today, though. Interesting. Okay, so even though I'm bullish, I guess it's going to pull back first. Okay, so what I'd be looking for today, I'd be looking that it actually natural gas pulls back. So what we did here, folks, is this. You hit a low of 151. You had a great sign of strength going all out to 192, but it looks like it's just going to back and fill. Like it came back to 175. That'll probably be the buy, because I start looking at this UNG, and I think that's the same thing, meaning that, the UNG's at 1092, but if that could back down into somewhere 1020, I think that'd be a pretty good buy. Okay, so where do we go here? Let's see, WHIS. So if I'm saying that it's going to back down, that would be a bigger build, Tom, right?
Yes. Okay. Yeah, you want more supplies, more of that commodity in the market, so that people are going to pay less for that commodity, right?
Okay, so what about 62?
Sure, 62.
You think
Round
that's
it
enough?
up.
I don't know.
Yeah, that's usually a big. Natural gas doesn't
really
stray.
close.
I say that,
Yeah.
hey, but they also say go with your first
62.
instinct, man.
We get 62.
They say trust your first instinct. When they teach you, test taking strategies and so forth. When you start getting into that second guessing game, you can send your mind down a rabbit hole. Usually your first instinct, if you're thinking things out thoroughly and properly, is usually the just in general. Not there, but why not?
I agree. That first deal, no
you
matter
can question
what it
yourself
is. Yeah.
Over and over and over and over,
There's no doubt. So let's go over to the gold contract, take a look at gold out here. So we got gold, folks, a year over the breakout area, and it's hanging tough, so this is going to be pretty cool watching this shake out, man. Bottom line is that you're at 1817. You got monster volume again today. We got 139,000 contracts already today, man. So that says we're going to start banging out 230 again. Yesterday we ended up doing 248. So good numbers, man. Good numbers. And if we go to the GDX, we take a look at the GDX. That little baby, it's up 7 cents. That also came in with decent volume yesterday. We did 34 million shares. You had a swing point out there with 30. So there's an ABC up. This is a monster ABC up, too. Pretty cool.
Yeah.
Strong action out there. This bond market, man, this is crazy, folks. So
it is interesting, just sputtering along, man. I put that on like a year daily, just right when you said that. I put the 10-year even. Talk about holding the line of about, coming into that 139.15, ticking across. How many times we're going to bump up to that level, man, and we're up again.
Exactly. And so we've been here since, March 9th. But the way this is trading, like yesterday, the volume went up. Today, let's see, it'll be close today. We did 216,000 contracts in the 30. We're at 99. Let's go look at the 10. What's just amazing about this, man? The correlation is that you don't have markets at all-time highs and the bonds at all-time highs, but we do.
Yeah.
I mean, that's but it's almost looking to me like it's going to break topside, man. Yeah, see this yesterday? Look at it. The 10-year yesterday did 929,000 contracts. That's big contract volume, man, for the 10 right now.
I mean, that level to me looks like 139.15, where that's going to be, we're only 6 ticks away from it, right?
I know.
But, when I put this 10-year, the ZN, on that chart, man, 139.15, it's as plain as day. I mean, it bumped up there. At first, it spiked above there on the ridiculous acceleration on March 9th. You were up there again on March 10th. You made it back to that level on March 27th. You were up there April 1st. You were back around there in the middle of April. You were back around there May 8th. You're back around there May 15th. And then, we had that euphoria where we got to about a yield of 0.9% when that 10-year pulled back to June 5th. But guess what, man? We're right back up to that level again June 30th, and now we're coming right back up, man.
And 0.9% seems so large interest rate right now because we're at 0.6 now, right? Isn't that funny? 0.9.
Yeah.
Think about that, folks. That's sick. You can think that a 0.9 is a high interest rate. Okay. The bottom line is that we're 0.65 right now, and 6.5 or 6.1. I'm gonna say. Yeah, 6.3, 0.63. You know. So it's going to be wild. Just rates, rates coming down. Next week, Tommy, I meant to ask Kevin Hinks about the commodity markets today, because where I'm going, folks, I think inflation is kicking in a monster way here, and that's why I think these markets are staying higher, actually, because if you have all this money, so picture this. When I was doing this number, in the whole world, there's $2 trillion worth of cash. This is off the United States Treasury site. So there's $2 trillion worth of cash in circulation. Hard cash?
Okay, actual paper money, whatever it be.
Money. Well, when we just did the CARES Act, they put $3 trillion into the marketplace.
Paper money's going out of style, man.
Well, and so you're looking at it, it's like, okay, more dollars, less assets.
Hi, folks. Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Well, they get right next to this natural gas number. 56. The estimate was 57. Yeah. Good number.
Yeah. And that market, I mean, it might be, man. Anytime you have Warren Buffett coming in at basically, multi-decade lows you're talking about, and you're up from 144 to 186 right now in that contract, man.
And he gets the pipelines, which the bottom line is that people have been trying to build pipelines for 12 or 14 years, and they can't get it done. So you're getting something that is very hard to. It's a defensible position in a huge way. In a huge way. Yeah, no doubt about that. Let's go take a look at some of the higher volume equities out here. So if we take a look at Bed Bath & Beyond. Let's talk about this.
Oh, man, right?
Yeah, so this is down $2, folks, trading at $8.29. We'll just go through a couple of these and jump back into that. You got Bank of America down 34 cents. Virgin Galactic's up $2.43. That's quite a nice bid. United's off $1.44. Boeing's down $3, but let's go to Bed Bath & Beyond because this is,
20%, man, that they're down from yesterday. And the revenue was just, last year they took in $2.57 billion. For the quarter this year, 1.3, almost 50% cut in half, man.
Yeah.
And it would make sense. A business like that, very few people found themselves being quarantined and saying, I got to get out and go to Bed Bath & Beyond.
Seriously.
And go get some of their products. Right. Just not where they wanted to be, man.
No, and, even listening to your show this morning, those big, Bed Bath & Beyond is so large, okay, that the real estate value that they're paying in rents, I don't even want to think about it. I mean, it's
they're closing 200 stores because they don't want to think about it either, man.
Yeah, exactly.
And they have to. This is just accelerating. You just see it, man. That's where good management and companies, this was coming, and you really needed to get ahead of it. And the companies that didn't, they're really paying for it, man, because they weren't equipped to compete with Amazon, Walmart, Target, Lowe's, Home Depot.
Right.
What can you not get when you think about literally Amazon, Walmart, Target, Home Depot, Lowe's?
You get it all.
There's literally not a thing I can't think of that I can get from those 5 companies. And then you throw in what you use electronically, and we all know those names: Netflix, Microsoft, Apple.
And in Bed Bath & Beyond's case, then we haven't even talked about the specialty folks that are selling sheets, specialty, right? Do you know what I mean? You've had those, I forget the name of these companies coming in, but there's plenty of companies coming in that sell high volume,
direct to consumer, right?
Right.
Advertised on Instagram. There's a lot of companies, man. You hit their shop now, whether it's shorts, shirts, fashion, retail, home goods, totally, man. Totally. Yeah.
Totally. We had a question in the YouTube Tigers Den about the bonds and the TLTs and all this. I wouldn't. The easiest way to do this, folks, inside the bond market is don't trade it. That's the name. That's the name of the game. I've traded bonds so many times. I wouldn't trade them because what has happened is that the Fed has the stranglehold on the bonds. They've told us that flat out. And they look like they want to break topside, but even if they break topside, I don't see us going from like a 0.6 to a 0.01. You know what I'm saying? So it's not worth it. It's dead money. That's kind of.
Sorry, can you just say that you don't see it going? You're talking about yields? You don't.
I see the yields, even if they go from a 0.65, which they are right now in the 10, to a 0.01. That's still
so basically
not worth.
To zero. Is that what you're saying?
I'm sorry, what?
To 0.1 or 0.01?
0.01.
That would be.
They could go flat.
To 1%? Are you saying going to 1%?
No. I'm saying 1/10 of 1%. Okay, so
0.1. Okay.
0.1.
Here,
let's just. I got
0.1.
it. Okay.
It would be 0.1 then. It would be 0.1.
So, folks, 1 point is 100 basis points. Right now we're at 65 basis points. It could go to 1 basis points, and it still wouldn't be worth trading bonds. That's what I'm talking about.
Okay. Then the yield would be basically 0.01%.
Right. Okay.
That's 1/100th.
It's a flat market. There's much better things.
I just call that zero because you're at 1/100th of a percent. So yeah.
There's much better things to trade out there. That's what it comes down to.
And this 10-year chart just looks like. What if it just stagnates at 139, man? It's kind of just been there since March with some volatility, but you could just be right there, man.
And they listen. They said for 2 years they're going to keep it there. Yeah,
so. that's a manipulated market, man, and it's knowingly manipulated. There's nothing wrong with that. The Fed's come out and said.
Right, they told you.
Yeah,
and
exactly.
What will happen, folks, by the way, is that they will just keep the bonds. They'll keep the bonds. They're not going to sell it back into the marketplace.
Sure.
We went through this, and what happened in 2007, 2008, when this was first coming down, people saying, well, what's going to happen when they sell back into the marketplace? It's like, why are they going to sell back into the marketplace? They have unlimited money. They don't have to sell back into the marketplace.
Right.
They let them expire. They roll them over and say la vie.
It's an easier way to do that, right, as opposed to needing to find a buyer in the marketplace.
Sure. They don't need a buyer. All they have to do is hit another digit on their computer, and all of a sudden there's another $1 trillion.
Yeah.
I mean, that's what it is. It's that cut and dry. Okay, let's get over and take a look at the S&P. There's going to be pressure out here, man. This is going to be interesting. We're coming down right now. Let's pull this back. Okay, so we're coming down into where the surge went higher yesterday, starting right at 3 o'clock. I mean, yesterday was the classic, too, Tom, that, Monday, Tuesday, and Wednesday of last week, that's when the S&P would go up 20 points coming into the close. Bottom line did the same thing yesterday. And now we're coming into that area, folks, okay? So, we hit a low out here of 31.44. You're at 31.46. You have to build some cause here, but what is sticking out like a sore thumb is the low that was generated at 11.20 yesterday, which is, what is that? 31.26. So that's 20 more points down.
Yeah.
That'll get some attention.
It's been a quick drop since, that opening bell, man. 31.70. We're down more than 20 points, and it's been tough to find some strength. And we've been open for 67 minutes in the market so far.
Yeah, interesting. So let's see. We got another request here. BE, okay, Bloom Energy. Okay, what are they? Manufacture power generation equipment, online generation systems, fuel cell technology. Okay, the low's $2.44. The high's $14.51.
$1.5 billion company, not bad.
Yeah.
They got some revenue. They don't got no earnings, though.
No, they get revenue, no earnings. Yeah. Okay. So let's take a look here. Oh, I see. Don't buy this thing. If you're in this, don't buy this, man. This wants to pull back to $11. You're at $12.56. Yeah, let's see. I mean, this has been a rocket ship. There's no doubt. I see what's going on. Yeah. See, you're up testing this on the 21st, and you don't even have. Well, 1 second. 15 million. Versus 22. What day is today? Thursday, right? No, you're not going to have.
Yes.
You're not going to have the. You're not going to have the juice. Yeah, and I'm sure that one of the targets are telling us several stock jockeys are pumping it. Yeah, well, good. You can, if you own it, give it to them. Let them have it over the weekend, man. Take your money and run. You got to love it. And I'm sure, many people are bringing up that Robinhood app, right? Because the bottom line is that it is cool to know where they're coming into, particularly folks, okay, as it's going up. And then on the other side of that, when any of those equities are going down, then watch out, because that's when people get trapped inside of equities. Dow down at 236, NASDAQ up 25, NASDAQ up, S&P's up 20. Tommy and I come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's off 305. NASDAQ is down 3. S&Ps are off 25. And we're getting a little action on the downside here. You're getting a little momentum in here, folks.
We sure are, man. We're right next to where those intraday lows yesterday.
Yeah, and then in the NASDAQ, this NASDAQ has a nerve, man. I mean, the NASDAQ almost looks like it wants to go red.
That would be a shame.
That would be an anomaly. There's no doubt about that, man.
Oh, man, right?
You know,
I mean, these moves, like, yeah, I heard you talking a couple of days ago on your show saying Amazon could pull back to 2,700 and be fine. Man, we just keep going up. Amazon's up 1.2% again today, $35 in the green. It's just remarkable. Microsoft pulling back from their open. Apple shares, let's see. Yeah, all the tech stocks besides Amazon really pulling back a bit.
Amazon won't budge, man.
Oh, man, it's just... Yeah, I mean, maybe Amazon's going to breathe a little bit, but maybe the market is just massively, I guess it definitely was massively underpricing how much this might benefit Amazon in the future as the whole world goes online, man, and Amazon does everything online.
There's no doubt. What is also on the table, and this is what always blows my mind, Tom. So when you look at the NASDAQ, you know, when the NASDAQ has the type of explosion that we've seen, what blows my mind, though, is how far the NASDAQ can also pull back.
Sure, yeah.
That's the thing, folks. They just say, oh, it never can do that. Just like Amazon. When Amazon takes a hit, like, I've never been able to buy it because every time it takes a hit, the hit is so dramatic, I'm saying to myself, oh, it's never going to go up again. It's that hard. It's that hard to buy it, you know?
Sure, sure.
You know, we'll see where this baby shakes out, but we're taking some heat out here right now. And so Thursday, you can only get a day.
NQs are negative by 15. Watch out, man.
Yeah, and it's going right after this that spike sure. 26. So if that's what we get, then what's on the radar? Yeah, this will be interesting, man. If we I suspect we'll get that and a little bit more. You know.
Yeah.
And then if that's what we get, then on the radar, folks, is 29.23. So you're talking a whole different ball game here. Because what you'd have is that's the bottom of this consolidation, if that's where we're going to go. Yeah. So, and there's not much action next week. Actually, let's go look at that, because I believe next week the banks start earnings again. 1 second.
It starts, man. It starts quick. 14th. It does. Okay.
So what day is today? The 9th? 7? Yes. Okay, so...
You're talking about Tuesday, 14th.
Wow. Okay, so banks start the 14th. Yeah, that kicks off earnings season. Well, maybe that's it. Maybe when they're kicking off earnings season, we'll see just how much these companies are not making, and what are they going to basically do in the future, you know, to basically get the bucks going. right?
Yeah, I mean, earnings got to come in at some point, man. They're going to come in for Amazon, Microsoft, Apple, and the likes. But yeah, it's going to be an interesting, maybe one of the most interesting quarters of earnings ever, man.
Yeah. And if we go to the small caps, this is such a cool lesson, folks, in the aspect, if you heard this a million times, if you've been in the market just even a bit, is that, when you're selling something, you want to sell the weakest. And the small caps have proved it like beyond belief. I mean, the bottom line is that a couple of tigers in both of the dens we have, it's just a replay. They love it when the small caps open up, they just sell the small caps, right? Because even with the NASDAQ going dramatically higher, folks, okay, the high in the small caps was Monday at 145 and we're at 138. And it gave it up on Monday, too. So that's pretty wild, man, when an indice, cannot hold at all. And we know that the highs in the small caps was August of 2018. So different ball game.
Yeah. So what else, right? How about Square getting a downgrade just because they've gone up so much recently?
Just because they went up 200%? Yeah, I heard you. Yeah.
Some of these companies, the same deal, man. I even, for the first time yesterday, I was looking at Amazon and I was saying, maybe the Amazon just priced in the next 3 to 6 months to a year of growth, at least, right? You know what I mean? You go from 1,600 to 3,100. You better believe it's pricing in a lot of future expectations. So all of these companies, man, Square, Zoom, all of that action. DocuSign, right? DocuSign, man. Just huge, the returns. So a lot getting priced in about the future and all of those prices.
No, there's no doubt. We get over to the oil market for a second. Let's take a look at this. So you got Exxon. This is getting hit. This is interesting, man. See, this Exxon, this is going to be like a scandal whenever they're going to have to basically write this down, that monster oil company that they bought.
Sure.
And they're fighting like crazy, folks, not to write this down.
Who wouldn't? No.
Yeah, no, totally, right? Man. Totally.
Nobody wants to take billions off their balance sheet, man, that you get to include as an asset.
Yes, there's no doubt. Yeah. And, we'll see whether we can get up to higher oil price, but it doesn't look at this particular case. No doubt about it. Yeah. We go take a look at so 30 is still moving. That's interesting that the dollar turned around here. Let's take a look at this. So the dollar is up 243.6. Yeah, so that rejected the price at 96.235. This will be interesting. But the swing point there is 96.385. So it rejected that swing. Not that, if we go take a look, you'll see the euro as well as the pound. They got going yesterday, but euro gave it up today at 113.71. We take a look at the pound. That hasn't given it up yet, but that hit. Yeah, see that hit 126.70. You're at 126.16. That's telling me though this thing still wants to go to 128. So there's action there. A couple of tigers are saying that Tesla is almost red. That's going to be quite a move because last time I looked, it was up $15 or something. Oh, there you go. You're only up $8 now.
I was looking at. Sorry, I was going to just amusing. We talk about it all the time, right? All these companies are worth so many now. Amazon, 1.5 trillion, et cetera. What can you buy? You can buy like 15 different companies that we all associate with, Walmart, Target, all those companies combined.
Right.
Well, even Tesla, man, you can buy Toyota. I think Toyota's market cap's about 176 billion. Tesla's approaching like 230, something like that.
Yeah.
So you could buy Toyota, you could buy Uber, you could buy Lyft, and you could have $5 billion left over. It's just staggering, man, But Tesla, with those batteries that they're building, man, that's a commodity. And even the technology that a company like Uber might have for self-driving, different story when you talk about building electric cars and the factories that they've put together in China, especially for something like Tesla.
No doubt. And, for the Tesla traders out there, what you got going for you, I believe they're buying puts on Tesla. That high volume low yesterday, the high of the low is 1344, the low is 1311. That's game today. So, that was that. There was a trade, Tom. There was 24,700 shares on one block. It was I think when I did the numbers, it was $35 million trade.
Okay.
And that's what sent that back down. Most times, that isn't when a big fund is getting out. There's not one trade.
Look at the volatility. I got it up there. Tesla's pricing in $63 of movement by tomorrow's expiration. So you want an at-the-money put, it's going to be $25. It expires tomorrow.
There you go.
There you go.
Dow down 340, Nasdaq off 28, S&P's off 30. Stay right there. Come right back.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
Whatever you think about, you bring about. Whatever you focus on grows.
you see, I believe that everything in life happens for us, not to us, and Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Bam! The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow down 343. Nasdaq's off 23. S&Ps are off 30. And bottom line is that we'll see whether we get any volume on the way down out here today. The SPY right now is trading 18 million, so that's gonna get juice. It's gonna be a lot more than yesterday. We were at 54 all day yesterday. So
yeah,
you're going after these lows.
Definitely.
Yeah, we just missed them by 15 cents right now. So if you get that expansion of volume, you can picture a little follow-through on this even coming into the weekend tomorrow, folks.
You know, and it's going to be, these things accelerate quickly in terms of the Ivy League just came out and said no sports, at least until January, no matter what happens, right? I talked about it in my show. They were the first ones to cancel their conference basketball championships ahead of March Madness. And everybody came out and said, the Ivy League, they have different priorities, best schools in the whole world, man, and they're not going to focus on that. Well, guess what? Within 48 hours, multiple NBA players tested positive, and the whole world's sports world shut down. You're probably going to see some similar following to that, I anticipate, man. We just got the Florida numbers, right?
It's a disaster. Yeah.
Highest death toll yet, folks, 120 people, almost 9,000 cases. And putting the statistic up here, this is the data just out, 8,948 as of yesterday, okay? Median age, 38. The real number that's really worrisome, highest total of percent positive by a long shot of 18.39%.
Yeah, and check out this number. This is the number, folks, that is really sad. So yesterday, 48 people died. Today, the day before, 48 people. Yesterday, 120 in Florida. That's how dramatically it went up. We get a problem here. And what I
Wear
can't,
those masks,
those poor people in Manhattan, Manhattan was like still 10 times more than what we have. So I can't even imagine what Manhattan was like.
We got to do something, man. It's
crazy.
So, yeah.
Stay right there, folks. We got Think or Swim coming up next. And I'm Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, pal.
Thanks, man.
Ride 'em, cowboy! Oh, get 'em.